Important information. This tells you about how we do analysis and about you using what we put out or what anybody puts out. And the importance of trade ownership. You must own your own trades. And always want to tell you to consult your own advisor or your own trading plan. We are not responsible for your trades. Only you are, whether they're positive or negative. All right, stock market. Well, for the week, stocks chop lower, pretty much lower as bulls try to hold it together, but weaken as upticks now fail fast. AI stock sentiment changes from necessary spend, all that money, to their overspending. Monetization, nobody knows. There's a few stocks that supply the architecture, and those are the ones that are making money, like NVIDIA, but the other ones that are trying to catch up within that ecosystem and develop AI, they're the ones that are spending massive amounts of money. And finally, that AI spend is being scrutinized. Look at Meta. I mean, that plunges 150 points on the downside. Now, for the stock market, and valuations are a big concern. JP Morgan, Goldman Sachs, Morgan Stanley, they warn of a 10 to 20% pullback in the stock market. We have been warning about that coming. The government shutdown now, 38 days long. Of course, that's a record, but the leaders are still very entrenched. Now, flights are being canceled. There are long delays. There are lines at food pantries, which are bringing optics reminiscent of the 1930s. Well, these leaders are going to start worrying about their jobs because that's really what they worry about the most. And before you know it, they're going to be forced to come up with some kind of a deal in order to get the government workers to get paid, the people that are entitled to get paid for the work they do, and for those SNAP cards to be available again. We don't really want to see food lines out there, do we? SCOTUS, well, Supreme Court of the United States looks skeptically at the Trump tariffs. Now, remember, the tariffs have not mattered at all. The market went up when the tariffs were on. It doesn't, there's all kinds of rhetoric on there. If the tariffs come off, well, then how are we going to pay down the deficit? If the tariffs stay on, then it's inflationary, and the markets have not cared about that. And for those of you that are thinking, okay, we can get at Trump, and I'm not supporting Trump, or not, I'm supporting him or not supporting him, neither of those. What I'm telling you is that there are lots of ways that the tariffs can stay on. There are many statutes out there, and there are not going to be any refunds. So if the Supreme Court does say that Trump didn't have the power under the code he's using now, he's going to pick another code, and those tariffs are going to stay on. Challenger, well, that reported that companies have slashed 153,000 jobs. This is the worst report since 2003. If there's any sign that the economy is slowing, well, certainly that is it. I happen to think that the AI spend is what has held this economy up and what has masked over what is a significantly weakening condition. And that is very, very likely to be an influence on the Fed in the next several meetings. They may not cut again in December, but we're probably going to get some cuts early part of the year because the economy is very likely to take a dip. Earnings, they're widely mixed. The best one of the widely held was Micron. That had a big jump, but PLTR, CRM, AMD, they were big losers. Stocks that had gotten a big lift in the AI craze and now giving significant ground to the downside. For the week, stocks are lower. The indexes are down 2.5% to 3.5% as of 10:30 a.m. Eastern Time. This is the time I'm doing this recording. And interestingly, there are no safety bids in bonds or the dollar. What we really see is people moving to cash. That's bad news for speculative areas, especially crypto. Well, you all know that I'm pretty negative on the crypto market, on the Bitcoin market. And right now, we see Bitcoin down from $126,000 down to about $100,000. And they're trying to make a stand at 100,000. I think it's going to break down under that level and then get a little bit of support. But look at our analysis that we have put out on the Bitcoin market, on the strategy market, MSTR. They've all been very negative. We nailed that, and there's more downside to come. So that is what's moving the markets so far this week. We're going to move over to the stock market charts. We're going to look at the S&P 500 here on November 7th. I want you to watch FutureSpeak. This is for levels 2, 3, and 4 for all the other updated analysis of the indexes, plus metals, currencies, foods, energy, crypto. That's all in there. And Arvi does a spectacular job every Wednesday, and that's for levels 2, 3, and 4. So do become a member and do watch that video. And earlier in the show, I talked about this new video category called In Play that Matt is introducing. He does a fantastic job on that, really teaching how to know when a trade is in play, and that's a new video sector, again, for levels 2, 3, and 4. Let's take a look as we look at the charts here. So we're going to come down and look at the S&P 500. So we're looking at the S&P 500. The left chart over here is the weekly chart. And what we're showing in here is our reversal scout right there and the 34-week moving average. I like to look at the 34-week moving average because when we do cycle analysis, that tends to be a magnet. And I'll show you that. As you can see, it touches it under here, and that big breakdown here. And then after the break, of course, crosses it. So this is an important moving average. A lot of people look at the 200-day moving average. I recently did a video that compares the slim ribbon to the 200 and the 50-day moving averages, which are so commonly used. And the slim ribbon is just a far, far better way to look at the markets. And this is the slim ribbon right over here on the daily chart. So let's look first at the weekly chart. And this, you can see, only has that little bit of information on there. But I'm going to switch over now and look at the weekly chart, and you'll be able to see with our cycle analysis, as the analysis pops out at you, you can see right there. So now what we're looking at is the money flows, essentially the movement in and out of the market, which occurs on a somewhat regular basis. If you look at the minor cycle right over here, you can see that, well, the movement in there is very close. I'm just going to trace this out for you. Minor cycle here, minor cycle here, minor cycle here, and here. All of those beautiful rhythms. And what we learn from the shape of them is the condition of the market, and also the momentum conditions based on the reversal scout on the weekly chart is what I like to look at. Again, that's the 34-week moving average right over there. So now what we're looking at as we look at this last cycle right in here is that we had talked about the yellow zones, the corrective period, and you can see as this now has turned lower that we're very obviously in this corrective period. And again, you could see the minor cycle, and that minor cycle that comes out over here to late December. That has a pretty good alignment with this 37-bar weekly cycle, which we give credit to MVP for putting it on there, and he's right. I mean, when you look at the movements in here on that cycle, it's pretty clear as they align all the way back over here to those key lows. I mean, it's really a good catch by him that these cycles are that consistent, and that takes you out over here to late December. So a lot of people writing to me, Slim, you're looking for a decline into late December. I mean, what about favorable seasonality? Well, more years than not, December is up, but some years it's down. And I think that this year we're going to see some declines into December. You can see that evening star shaping right in here, and often that is what makes a top, is a candlestick like that. Here you could see it was an engulfing pattern right over there that made that top. So the candlesticks are valuable. This is interesting because you got that engulfing pattern right over here, but then it didn't follow through, and you got one more surge on the upside. So many people say to me, I keep saying so many people, but I get lots of comments on social media or emails sent to me that says this is not going to end until we get an upside explosion. There's got to be a hook. There's got to be a market that just runs itself out by going to the upside in a very significant way and then making that excessive top. Well, I've traded the markets for 51 years. I've traded every bear market and every crash. That's a crash of 78, the crash of 79, the crash of 87. All of those, I've traded every one of them. And believe me, there's not one time when anybody rang a bell and said, that's it. We could have seen the top already to this market. A lot is going to depend on the depth of this decline and this corrective period and these positive periods out over here. Can the market have a correction and then make a new high in here? Well, that's possible. It's also possible that we are seeing the top being formed right now. I can't make that call yet. All I can tell you is that we're very likely entering into this corrective period. I don't have these extended to any price levels on the downside yet. Why is that? Well, because we have momentum conditions that are still positive in here. This hasn't turned down yet. So, what's to say that the momentum won't catch on again on the upside and extend out what this top period would be. So I haven't turned this down yet, but I'm thinking that there's hardly a way that it can avoid this 4.9% drop. That's nothing at 65.72. That's only 90-something points lower than where it is right now. So that's like nothing. Most likely it's going to touch this 23% retracement level. That's off of this bottom here. That's a 6.9% drop with a very good chance that this corrective period gets down 10 to 11.3% down over here. That's prices that are down around 6,200 down to about 6,130 down over there. So were this momentum to turn negative right there, then I would be taking this trend line and I would be pointing it down to somewhere over here into that December period. So that's what it would look like once we get the momentum turning negative. Now, there are some signs on the short term that it is turning negative already, but it is not very significant yet, I'll tell you that. And that is here. Now, this is the S&P 500 on the daily chart. I'll bring in the cycle analysis in a moment. I want you to see what we've done since April before I bring in that cycle analysis. So we're looking at the slim ribbon, the reversal scout, the slim ribbon PO, and the option bias indicator. Slim ribbon is a free indicator. You can get that for Thinkorswim from our website, or you can use it on Tasty Trade or Wealth 365 charts or TradingView. It's on all of those, so you can use the slim ribbon, and that's right over here. You can see that the slim ribbon turned positive right over here. It stayed positive this entire rally. So this time it turned positive back here in April, and you got a little corrective blip here, but then it turned positive again right over here just 2 days later, where it went neutral and then positive again. But now it is turning neutral again. You can see that arrow right there. The reversal scout is also rolling over. These are not enough to turn our short-term indicators bearish yet. So what we're getting is the signs only of a corrective process beginning. Look at the slim ribbon PO. Every one of these arrows tell you upside momentum resuming. Every one of those in this whole period now here. Here's where it went neutral, and here it's going neutral again as this market starts to bring sellers in. And not enough yet to really say anything significantly negative. Still, we're getting to a cyclical period where the decline can turn into something that is more negative. And I'll show you that as I bring in these cycles. So we're going to look at the cycles right in here as they pop out at you. Now, each one of these vertical lines is where a significant cyclical low has occurred. And this right over here, we derived from the FEZ and the DIA. They have a 26 bar that is the biggest influence on the market right now. And any other things that we were looking at, we took off of here because this is such a clear influence. Now, you can see on here the option bias indicator. This has stayed positive the whole way. So this has told you that, you don't really want to change your position much off of positive in your options until the market really tells you to. I think this is going to turn yellow in the next couple days, and that will be the beginning. Now, we're probably going to see a more compound top being formed. So as this turns over and this goes neutral, then I put in this downside projection line. This is the 78.6% level right over there at 66.28. That is a warning level. Approaching this tells me that the upside forces on the weekly chart, the dominant, are giving way. Without that happening, this could not happen, where it's going to get down and test this level. If it broke 65.50.78, it's an absolute confirmation that this weekly chart peak is in place. If it breaks this area right over here on the 78.6% at 66.30, that is a warning that that top is in place. So it's a difference of a warning or a confirmation. Now, if you look at the cyclical timing in here and you see these blue lines, that tells you that somewhere in here is a cycle trough that will be formed. What that means is that this decline will end, and then there'd be a rally attempt in here. The deeper this goes, the less likelihood of this coming up and making a new high in this next rising phase. Why is that? Because we're learning from this action that this intermediate weekly pattern is weakening, and that it will not force these cycles to be positive anymore like we're seeing here on the daily chart. That's how you use the combination of multiple time frames to understand the market. Again, we're offering our cycle analysis workshop right now, which teaches you all of this in 26 modules. So it's just fantastic. Please do go look at that. So this that's what's key right over here. So now let's look at the two scenarios in here of the market. As we take a look at a bullish scenario first. So the bullish scenario would be this. You can see that, and what that would mean would be that this weekly pattern in here, which isn't due to make a bottom for several weeks out there, would probably have in the next, let's say at 5, 6, 7 days, a bottom formed in here. You'd get another rally, it could test this high or not, and then come down again, and you'd get this kind of sideways range-bound move in there. That would be the bullish case, where it comes down here. Even if this break was deeper and came down over here, then possibly what you'd get is something like another rally right in here that moved up into here, and then it met some resistance here and then had a similar downturn. So it would just mean the deeper this gets, the lesser rally that you would get out into this period, and that takes you out into sometime late November to early December for one of those rallies. So that would be how it would change if this fell a little bit deeper. But if it got very deep and got underneath this level, then the bearish scenario takes hold, and that would be this one right here, where it says, you get down under this level over here of that support, you come up and you have that kind of rally, and then you have a much steeper sell-off down to that 10% pullback is where that is right over there, which takes you down to the weekly 38.2. That would take you down, under 6,200, maybe close to 6,100 in the S&P 500. So this is the bearish scenario right over there. You can see it's moving underneath the support zones. There was a higher one that I took out of there. Again, that's that 78.6% at around 66.30, 66.31. And this is that important 65.50.78 level. If it breaks that, the top is in, absolutely. And then the next rally would be a failing rally, and then it would very likely have a sharp decline over here into that period in towards Christmas. Yes, the Christmas rally probably in that case would come between Christmas and New Year's if this is the way the pattern shaped up. And I'm telling you, based on the kind of decline that we're getting in here right now and the sentiment change in AI, I think this is the more likely scenario looking at this. Still, I gave you both scenarios. This is the negative one right over here. This is the more positive one right over there, where it just has kind of a range, and that range in there is what makes this top on the weekly chart, and the decline probably is only in the area of 4 to 5%. From that, and that of course would be bullish, and you'd be moving up again in this next period over here, which takes you out into January. Again, you can see where this corrective period ends over here in December, then these next cycles over here turn upward, and you get a Q1 rally no matter what happens in here. That's how the timing would resolve itself. So that's a look at the weekly here on the left, as I brought you that scenario and how it affects the daily patterns over here on the right, and what the likelihoods are for a market pullback to continue. They're very high and likely well into December. The only question is, how deep does it fall really in the next 4 to 8 days? And that will give me some kind of a message as to the overall market conditions. So that is the look at the stock market. Now we're going to look at our very, very valuable ranking system right now, which is something I don't show here that often, but I wanted to bring that to you right now, and that's right over here. So this is our ranking system. What this looks at is the 84 different widely traded symbols. So if you're an option trader, you're probably trading most of these or a lot of these because they're widely held, they're active in options. And what we do in here is we have a directional bias, and it tells you what the directional bias is. So these are the very bullish ones, and you can see the analysis suggests strong positive conditions. It favors the long side, as you see there in applied material. And what it's showing you in here is the conditions, the intermediate term and the intermediate term cycle condition right over there. And it gives you the long-term, intermediate, short-term, and the OBI, option bias indicator. So that's a good way to be able to see the conditions. And these are the ones that are bullish and very bullish that you see right over there. If I switch over here to a negative condition in here, you could see Meta, which is down 150 points just in the last couple of weeks. That's oversold. Now, how do I know it's oversold? Well, technical analysis, potential upside short-term rally in here under a negative intermediate condition. So you could see they're negative right over there, but look at this is orange. And when it's N1 orange, it says to you, it is extremely oversold. It's so negative that it's likely to bounce pretty soon. So if you were a trader and you wanted if you had a short position on and you saw this, you'd say, well, it's probably time to take some in. Or if you were aggressive, you might say that it's time to trade for a bounce. But you could see the ones that are very bearish or very bearish oversold. If it says oversold, it's because the option bias indicator has turned orange. So if you wanted to be able to scroll and say, well, which ones are the most negative or which ones are the most positive and the OBI, you could do that right over there. That shows you right there. I'm looking specifically for the ones now that are orange. Look at that. So in here you could see natural gas is overbought on the upside. That's P1 orange. The dollar index is P1 orange. It's slightly overbought. So again, these are things that are overbought. P1 orange, this is the soybean market, the wheat market, and that's the ones that are overbought on the long side. Here you could see overbought on the short side right over here, in other words, decline. Boeing, Meta, Netflix, Nike, Timus, here's the Great British Pound. Those are the ones that are N1 orange. You could see there are a couple more there, the Euro dollar and Bitcoin. Those are the ones that are oversold. Now, if they're oversold, but you see that the short-term and intermediate term and even the long-term are negative, that tells you that the bounce is likely to fail. So you wouldn't want to be in that trade for very long. It really gives you some sense. And then if you wanted to understand, why some of these are positive or negative, let's go back to the positive right over here. You see AMAT very bullish. You could look at the weekly chart right over here. It's going to pull it up and it shows you how bullish that is. So that it gives you an idea of how to use that. You can go to the daily chart right over here on applied materials, and you can see it's just super bullish when you look at that. So there's a unbelievable amount of information that is in here. So you can just type in a symbol and you can really get a great sense for the conditions of the market in the widely helds right there. So the ranking system, it really gives you a good idea. I showed you the bullish ones, I showed you the bearish ones, I showed you the ones that are overbought, I showed you the ones that are oversold, how to find the charts. All of that stuff is on here. It's just absolutely incredible, and I invite you to become a level 3 or level 4 member to get this ranking system. So wanted to show that to you today so you get a good understanding of which stocks are doing what, or which ETFs or futures those are in there. So the askSlim rankings system. That's everything I have to show you today. Do get acquainted. Go to our snapshot. Go to our free stuff on the top. Sign up for Snapshot Lite. If you are brand new, you'll get our information from Matt every day in his report, the SIR Lite on the S&P 500. On YouTube, subscribe to this channel. Click the notification bell. Like the video. Give it a thumbs up. And follow us at askSlim. And any questions you have on our memberships, information, questions on our huge offerings of education and analysis, or our specials, please write to Matt at askSlim.com. This is our cycle analysis workshop special. You're going to learn my method of analysis. I developed it over 50 years. Yes, that's correct. I became a member on the CBOE in 1974, and it was 1975 when a friend of mine, a drummer in my rock band from high school, handed me a book and says, you have to read this book, Profit Magic of Stock Transaction Timing. Out of that evolved the style that you see us using right now. It took me 2 years to write this and over 6 months to produce it, and we've added many videos to it after that. There's now 26 videos in there, plus many, many tools for text videos that you'll learn so much about analysis of the markets. This is an online lifetime access. You don't need a special platform. Everything is there for you. Access anytime and from any device. You'll look at charts. You will never look at charts the same way as you did before. Learn to improve your directional decisions and project in time and price. And there are bonuses in here. The Cycle Analysis Workshop now includes Slim AI, which is at the bottom right of the page. And it will coach you through all of these videos. You just ask it questions. It learned it all, and it can coach you very closely to the way that I would. There's over 4 hours of extra cycle analysis teachings in there and addendums that have been added since the original release. Level 4 members, you get an extra $100 savings. So right now this special is reduced from $12.97. Wow, that is a low price for this. All the way down to $8.97 for everybody except level 4 members. You could save an extra $100. Just contact Matt, receive those exclusive discount links, or go up to this area on the website, go to the front top, and you can click on there and you can see, save $400 on the workshop. Again, become a level 4 member or a level 4 members, write to Matt, get that special link, and you'll be able to get this for only $795. All of this teaching, just absolutely amazing. You can learn how to do the analysis as we do, and you will learn so much more. You're going to look at charts so differently than you ever have before.